at the market moves for today, February 20th, 2025, the NASDAQ was down about 0.5% on the day. You also saw the S&P down about 43 basis points. And really the market was driven down on three major stocks. And that would be Amazon down about 1.6%, Tesla down 1.7%, and Walmart down pretty big on earnings. You also had United Health down, Netflix, Oracle's down 3%. Those are the big losers. A lot in retail was down. Walmart was down 6.5%, Costco down 2.6%, and some of the banks, JP Morgan down nearly 4.5% on the day. And you saw Morgan Stanley, Goldman Sachs, all down, those that down about 4% or so as well. So certainly some weakness out of retail and the big banks, but some strength in healthcare, for example. AbbVie was up 1.8%, for example. So kind of a mixed day, but some of the bigger names certainly dragging down the indices. Tesla down 1.7% on the day as well. So what else? What other moves were there? You had Bitcoin futures. They were up 2.7%, so some strength there. Gold finished up 0.7%. The dollar index is down 0.8% on the yen strength. So we know there was the yen carry trade unwind last summer. Is that starting to creep in to the market psyche a little bit? That's a potential as well. You had crude, WTI crude up about 0.5% as well on the day. Now this is a Thursday, so we had the initial jobless claims. They came in a bit higher than expected, but continuous claims, which I always focus on more than those headline initial jobless claims, that actually was a bit better than expected. So the jobs market overall looks pretty fine. The Philadelphia Fed index came in at 18.1. That's down from the January level of 44.3. So pretty big drop there, mainly on new orders. Dropped 21 points to 21.9. And shipment index fell 15 points. So, there was all this this importing in order to kind of front load your orders before potential tariffs. And now I think that's snapping back a bit. But the jobs market, that looks fine. Prices paid index, that did increase 9 points. So you're seeing a bit of stagflationary type of data, at least coming out today. So, that was the market still kind of hanging around these all-time highs. Structurally, everything is fine. The credit markets are hanging in there. No big issue there. Could there be a 5-10% pullback in markets sometime this year? Certainly, and it's really our base case at some point, but it's probably more likely in the back half of the year than right now, where earnings are generally fine. The weakness really comes in names that have already rallied. The expectations were high, and they have good earnings, but maybe not meeting those high expectations. That's really where you see the downside in a lot of names right now. So, but overall, that's kind of healthy. That's frankly healthy to get downside in those names as opposed to names that had poor expectations and then they're worse than expected. That's not that's really where you get into problems when there's a lot of that going on. Right now, overall, the market is fairly healthy.